All right, what's up, guys? Welcome to this Wednesday market breakdown. So I have about three videos to make today. I have one for this is the first one, which is obviously for the advanced students, lots of members. And then the second one will be for regular FRX members. And then the last one will be something. It's more like a video journal. So I think once I'm done with these three videos, and I'm out of the house, so let's see how this goes. All right, so I was sitting in front of my laptop. I was about to record the video, and I was prepping my notes and stuff, what I wanted to talk about in the video. Also, by the way, this is supposed to be 5 pip entry. It's supposed to be 5 pips. Okay, so if I'm wrong, it's a very quick feedback. All right, perfect. So now I'll just do a very quick breakdown of this. Um, Or nah, so this is Lazarus members. This video is for Lazarus members. So I'm going to break it down for regular FRX members. This I will skip. So for those of you guys on Lazarus, I'll teach the topic I wanted to talk on, and then if you want to see the breakdown on this setup, that's going to be the first thing I'll talk about on the video for the regular FRX members. So if you want to watch the breakdown for the setup, which you can see it's a live setup. Okay, so this is a live setup I just sent out, and it's something I'm in on my account. So let's see how this plays out. What I'm actually looking for is a run of this and this. Again, like I said, I'm gonna break it down on the regular Forex members video. So let's see how that plays out. Now, what I wanted to talk about was I had in mind to talk about the setup I took on GU for a sell short here. So I took a short. Let's get rid of this a little bit. So we're done with this. All right, there's no point. We're done with all of this. Now, I basically have two things to talk about. This is going to be an advanced content for you guys. I took a short from here yesterday, just as you would have seen on my Instagram stories. Let's go down to the 5 minute time frame and we'll break it down. Break this down. So we have an inefficiency that starts from here, and then and you want to pay very close attention because this is going to be a lesson on intraday state change in state of delivery. Okay, and that was what I used to frame this concept. All right, so I mentioned before on the live session, I think that I did not want to see any resistance here. I didn't want to see this offer resistance. And there's a reason why I mentioned that I don't want to see this offer resistance. So what I was looking for was could we potentially have a run through these levels? That was the only question I was asking myself. Could we see price run through these eyes and expand up through this? Because again, obviously this is lowest is the career run, so I'll put a line there. That's this triple top is that lowest is the career run. And what I was watching out for GBP's dollar was how we responded to this. And that to me would have been a TGIF trade where if you're bullish in trade, so a TGIF trade simply is trading the opposing end of the weekly range. So if you're bullish, if you're anticipating a bullish week, then a TGIF trade will be you looking for shorts from Thursday New York session going into Friday London/New York session. So that typically is the time period for a TGI trade. Because typically, if you look at the weekly range, you're going to see that Monday, Tuesday, Wednesday is where you get the expansion in line with the weekly range. And then Thursday to Friday is what caps the opposing end of weekly range. Now, let's say, for example, you're anticipating bearish weekly range. Typically, it's going to be Monday or Tuesday, Wednesday, that makes the eye, and you get an expansion to the downside. Then Thursday, New York session going into Friday is where you can potentially get the weekly range capping off and you can trade the opposing end of variance. Now let's just use an example so you can see this in practice. So this is Friday, Thursday, Wednesday, Tuesday, Monday. All right, so this is this week's start Monday to Friday. Now, this is Friday, Thursday, Wednesday, Tuesday, Monday. You can see the low of the week typically forms around Monday, Tuesday, Wednesday, and this comes around Tuesday, and then you get an expansion all the way to the upside. And that is your move on GPU's dollar. So, and obviously Friday caps off the week, but you can see you still get something counter direction to the weekly range at Thursday, but Thursday does not necessarily cap off the weekly range. Uh, if you go back in the previous week and you did the same thing, Friday, Thursday, Wednesday, Tuesday, Monday, right? You can see Monday mixed to low, expand, and the eye of the week is capped on Friday. So on Friday we get up and you can have traded a short. Even on Thursday, you can still have traded a short, and that's the logic. So you don't necessarily need to time the weekly high or low for that to be valid. So I wanted to see DXY drop right now. And, it's very beautiful. Uh, beautiful. All right, so I'll explain this again on the FRX program. Just the reason why I have this extended out uh, hint market maker model utilizing this analysis. All right, so going back into GPU dollar. Now, typically when you get into these like this, now the market is a factor of time and price. Okay, so it's not just order blocks, breaker blocks, gaps, and this and that. It's not just all about that. It's all also about the factor of blending the time element in your analysis. Okay, so the time, especially intraday and also intra-week, is a really essential factor into anticipating potential market reversal profiles, into anticipating trend continuations and stuff. Let me check box real quick. Okay, so that is that is what the weekly profile is, and that's why the timing element of the trading it's the second piece of the puzzle. The first piece of the puzzle is price. Second piece of the puzzle is time. Timing. Timing is really important. Now, what I used to frame the setup was a measure of time, the time window in price. So I was looking at myself, I was thinking to myself, I was saying, okay, this is Thursday New York session where typically we can cap off the weekly range potentially and see price trade the reverse. So if I have an interest, if I have gone long bullish here and I have an interest, so the buys was just inside this two down candles, like I mentioned before, and I was looking at this small little value gap for longs. Now, I was saying to myself when I was looking at this for sell short, if I have an interest in being bullish, I don't want to see rejection off of this. Okay, I don't want to see price trade into this inefficiency and reject. I would like to, and you want to listen to this closely. You know, listen to what I'm about to say closely because it's a massive, massive clue. If I'm bullish, okay, if I'm bullish, right, we have a time window for taking profits, which is London close. That is around 4 going into 6 my time. That is a time window for taking profits. And during New York session, you want to see an expansion into a level of liquidity. That is buy side liquidity to the upside. Now, typically, what you would like to see is you want to see price when you see an inefficiency like this preceding a level of liquidity. You want to see price trade through, and then it becomes a balanced price range. Okay, so you want to see price. Typically, I love setups like that where just a level of liquidity not reached, we've not achieved price trades through an inefficiency leading up to that liquidity. So in this example, it's a CB, 1 hour CB. Okay, so this is a 1 hour CB. I would have loved to see price trade through, and then I would look for more longs to then go and take out this down. That's typically what I like to see. But when I see price stall and reverse, blending with the time element of the day, which is London close, that tells me that this is not wanting to go higher. This is respecting this reference point, which is a 1 hour CB, and it potentially might want to reverse. So what am I looking for? I'm looking for expansion to the downside to verify to me. So if you watch my entry, I'm not taking a short here. Why am I not taking a short here? Because I don't know if it's going to sell off, if it's going to keep going bullish. And that's why I do nothing here. I want to wait to see it break. And this is the difference between what you're learning from me versus what people are going to teach you out there. Because a lot of people are going to go there and just no context to what you're doing. And that's why I can never see them being accurate. You're never accurate because there's no context to what you're doing. Just going, there's an eye to a low. This is ultimate trade entry with inefficiency. Let's sell short. That's the logic. Now, they might make profit. They might be profitable, but you're gonna see that just no consistency in the long run because they don't use logic going into their analysis. They just jump in there. They look for patterns the same way retail trades that these people also trade. They go in there and you look for patterns and you're going short. Okay, or they're looking for a continuation to go bullish. Now, I'm not going and trying to sell short here inside of this inefficiency. Okay, I'm waiting for price to verify to me that it wants to respect this 1 hour bearish CB or not bearish CB, 1 hour CB. If it's a CB, it's already bearish. Okay, and my first bias was all right. We have very clean lows to downside, so this is low resistance liquidity. So if it's going to frame this, that could be a move to basically catch the opposing end of the weekly range. And that was the logic that went into the setup. Okay, so now we trade up into this, essentially the consequent encroachment of that 1 hour inefficiency premium. Again, I'm not teaching that because we traded up into this inefficiency, that's why I took it short. That's the lesson I want you guys to derive from this. Okay, I want you guys to really, really understand this lesson. I did not go and sell short because it traded down into 1 hour, up into 1 hour CB, and it's so short. I'm trading short because of the timing window, okay, and also because if it wanted to be bullish, it should have broken through, and this becomes a BPR, a balanced price range, but it's showing to me that it wants to reject. Now, ask yourself this question. If it rejects the downside, what are the discount levels there? That's the next clue as the intraday change in states of delivery. Okay? And that's the next question when ask yourself. If we are trading to downside, is there anything else that we're referencing in form of inefficiency to continue to go long? There's nothing. And that is a massive clue to you that whenever you see an efficiently traded range, something like this, where just nothing else, the bullish order block has been utilized one, two. Okay, we've utilized the bullish order block. There's nothing else except these old lows. So typically, whenever you see price action like this, wherever we hang around the level, that we expand, you don't want to see price trade back down into that. Okay, you want to see prices continue to just keep going to the upside because all of this will be viewed as accumulation. But none of that happens. We accumulate, expand to the upside, and then reverse. And that was a clue to me that, okay, we're shifting gears in the marketplace. And that was the intraday change instead of delivery. So what I was looking for was, all right, institutional financial drill, typical. And let me get rid of all these vertical lines because it's just like it's distracting. So I'm on a trade now on euro dollar for longs. So we gotta monitor this asset. Okay, it's going well. Sir, I'm doing this. Might move myself to break even. I just want to see you get up into this, and that would have been a very good scalp for Friday. Alright, going back into analysis. Alright. I was checking Discord to see if there's any responses. So what I simply did was, alright, now that this this inefficiency here is an intraday change in state of delivery. This is what I'm talking about when I say this is an intraday change to the delivery. Because if we're looking at retracement, we should not be seeing this, especially with the time we've hanged around this level. All right. So we've seen a change in state of delivery, and price will start to offer sell side liquidity to interbank traders. What I'm teaching right now is freaking gold. Gold. You should be going insane. It's gold. It's gold. Okay? It is gold. So this is an intraday change in state of delivery from offering buy side liquidity to now offering sell side liquidity. And what I would like to do as a institution trader is I want to align myself with interbank traders. Interbank traders will be getting in instead of this inefficiency to accumulate new shorts and then run sell side liquidity. And that was what I did. And what I did was to frame a short setup here instead of this, just like so my entry. My stop was here and my first target was here. And that's why I don't like trading uh this type of setup because like it's well the risk to reward is a little bit low. But I was able to take 50% off here, 30% off here, and I was waiting for a price to trade down into this inefficiency. But it stopped me out before it did that here. So I was able to take 80% of positions off at the list. So that's a good setup. That is the intraday change to delivery, and just to solidify what I was teaching when it comes to intraday change sale delivery. Now, change sale delivery, excuse me, is a factor of time and price. Okay, so I use the time element intra-week, which is Thursday, New York session reversal, plus intraday timing, which is we're getting into London close. And typically on Thursdays, you can get a trade during London close. Okay, London close can be a level of expansion on Thursday, and that was what I was looking at. So I was looking at New York close, which is I think it's around 2 p.m. 2 p.m. to 4 p.m. is New York close, which is 7 to 9 my time. Okay, that is London close, and that was where I was looking to take partials. And let's see, 7 to 9, and that was exactly where I took the remaining see 30% positions off. You can see that mixed low of the day and then price reverses right at the open of New York close. So typically when you get a London close setup, you can use New York close. So I'm gonna do more lesson on the timing element. We're gonna discuss all of that because there's a lot of things that I need to teach on timing element. So we're gonna talk more about that. So um, let's look at US CAD and see what I was talking about US CAD. Just a quick commentary on your dollar because I'm watching this. Since the guys on irregular FX members should not be privy to this. 15 minute time frame, real quick. Uh, the reason why I frame this as a long setup is because we have going to the 1 hour time frame. We have institutional entry drill here. There's no reason why we should trade back down into this. Go into the 15 minute time frame. We trade down into a level of inefficiency, which is that institutional entry drill, bullish L block, propulsion block. We don't want to see price trade through the 50% of the candle. That is the rules. If it trades through this, we have a feedback that we're wrong. And that's why we just stop loss. Okay, so the next level it should be drawing towards is this line. Okay, full shutter block, propulsion block, price not trade through propulsion block 50%. So I want to see quick feedback. I want to see this candle. I like that it's traded down to this candle. Now I want to see it expand and take out this liquidity. And obviously that's going to be my first partials. Then here's my second partials and stuff. So That's a quick figure I'm looking for. Let's go and look at you as a CAD. I wanted to show you guys what I was talking about when I talked about when I mentioned intraday changes of delivery. You can see this. So this is Monday's price action, Tuesday, Wednesday. I think on Wednesday I talked about price running this as an equalizer from this inefficiency. I was watching the lows. I was like, okay, this is very clean lows, relatively clean lows. But this was a tricky situation to catch a short, which is why I never which is why I never mentioned taking any short here. I wanted to see price confirm to me that it was bearish. All right, so we run higher and take out the shorts of liquidity, and then we break below. Now that is the same 15-minute inefficiency. You can see here, institutional entry drill, rallies higher, trades back into that, rallies, trades back into that, rallies, trades back into that, rallies. So you can see the sensitivity of the fair value gap. So this is not a BC. Okay, this is not a 15-minute BC, it's a 15-minute fair value gap. Remember the difference between a BC and a bullish fair value gap is the size, right? This will be a BC, but this will be a fair value gap due to the size. Okay, so by looking at the sizes, you can know which is a BC or a fair value gap. So we trade through this, which is what I was saying. I wanted to see on JPR's dollar. Had I seen that on GU, then I would have looking for this scenario to play out for continued longs. Okay, and that was what I was watching on user cap. Traded through this 15-minute fair value gap. Once we trade back up into that, it's now a balanced price range, which is a natural support and resistance for price. So this is 15-minute balanced price range, BPR, 15-minute BPR, price trades through this. But now watch, as we trade through this, we've not run out the liquidity yet. Okay, we've not taken out that liquidity, and that's what validates this to me as this is still a very good setup. Had we taken out the liquidity, I'll second guess this, and I will not take this as a setup because I will not be sure. Okay, but because we've not run out the liquidity, and this is the target or this is the draw on liquidity, we can use this as a setup, and no one else will catch this. Notice how it never gets back to the old lows because retail would say this is classic support resistance, but never gets back up into the old lows. It utilizes the balance price range to then frame a new short setup, and you can see the expansion to downside. It gives you a lot of pips. About 33 pips. Now the question is how do you utilize this framing stop loss and stuff? You want to put your stop loss above the BPR. Okay, so you get very, very quick feedback. So typically you can use a 3-4 pip because you can trade with through the BPR sometimes and then still sell off. So when I use adequate, let's say 5 pips. All right, you want to use like 5 pips above the BPR. So if this is stop, right, and this is your stop loss 4 pips. You add 4 to 5 pips, and that will be it. This will be your stop. And then you're looking for expansion through this old low, and then you have a big figure number. So obviously you're looking for 10 pips, 20 pips, 30, 40 pips. Go with that big figure number, and that would have been your setup for USD CAD. And that is what I wanted to see on GBP's dollar. I wanted to see that type of price action in GBP's dollar here, where we trade through, becomes a balanced price range, and we continue the expansion. All right, but we don't get that. Okay, it just rejects, and that to me was an intraday change instead of delivery from offering buy side liquidity to now offering sell side liquidity, and then looking to get a snap with that. So hopefully this lesson was insightful to y'all. The next lesson will be on central bank data's range and an advanced way of utilizing central bank data's range, and the pros and cons of utilizing central bank data's range. So you guys will have a wonderful day, and I'll see you all this Sunday.